Today's pick number 1 is GDXD, MicroSectors Gold Miners, 3 times Inverse Leveraged ETN. Recently, on March 28, 2024, GDXD hit an all-time low, diving down to $3.33 from its yearly peak of $8.71. This dramatic drop has sparked a lot of chatter among investors, with many wondering if GDXD is now oversold. So, what's up with GDXD? It's crafted to move in the opposite direction of the gold mining sector. This means when gold miners are doing well, GDXD is supposed to drop, and if miners are in a slump, GDXD should rise. But here's the kicker. Despite recent boosts in gold prices and a positive outlook on the gold mining sector, which theoretically should hurt GDXD, the extent of its price drop suggests the market might have pushed it too far, tagging it as oversold. Why might GDXD be oversold? Here are a few pointers. Reaction to gold prices. Sure, gold prices have been climbing, and normally this spells bad news for GDXD. However, the drop to its all-time low suggests that the market reaction might have been overly aggressive, not fully accounting for the complexity of gold price movements and mining company efficiencies. Market sentiment, optimism in the gold mining sector has indeed been on the rise. Yet, the sentiment alone could have led to an exaggerated bearish outlook on GDXD, pushing its price lower than what might be justified by fundamentals alone. Economic indicators. While it's true broader economic indicators like inflation rates and interest rates influence gold prices and by extension, GDXD, these factors can also fluctuate. If the market overreacts to short-term movements without considering longer-term trends, it could lead to GDXD being undervalued. In essence, GDXD operates like a financial seesaw, inversely mirroring the fortunes of gold mining companies. Its current low price, relative to its performance and sector indicators, suggests it might be oversold. This doesn't mean it's a risk-free investment. Far from it. GDXD's nature means it's always going to be volatile and requires careful monitoring. To sum up, the dramatic dip in GDXD's value, though linked to the performance of gold mining companies and gold prices, may have overshot the mark. For market watchers and investors, it's crucial to not just follow the herd, but to also look at the underlying fundamentals and market dynamics to make informed decisions about instruments like GDXD. Today's pick number 2 is PLCE. All right, folks, let's dive into a wild ride with The Children's Place, a player in the high-stakes retail game. This is a story of legal drama, financial roller coasters, and strategic pivots, all wrapped into one. The Children's Place, known to many for outfitting kids, has hit some serious turbulence, making its stock the talk of the town for being massively oversold. Now buckle up because we've got a juicy bit about legal tangles. Picture this. Multiple class action suits are piling up, accusing the company of not being all that transparent about its financial state. Talk about drama. With a deadline for lead plaintiffs looming on April 29, 2024, things are heating up fast. But wait, there's more. Financial gurus are scratching their heads, wondering if the Children's Place can pull a rabbit out of its hat for the upcoming earnings. Spoiler alert, the skepticism is high, and the stock is feeling the pressure, taking a nosedive. In a bold move, the Children's Place snagged a hefty interest-free lifeline from Mythac Capital, a key investor looking to steer the ship away from rocky shores. And let's not forget the boardroom shuffle, adding more spice to the mix. Now, let's talk stock performance. It's been a wild ride, folks, with the price taking hits left and right. Analysts are eyeing a bearish horizon in the short to mid-term, all thanks to these mounting worries over the company's future. So, what's next for the Children's Place? With legal, financial, and operational hurdles as tall as skyscrapers, it's a cliffhanger. The big question remains, can their strategic moves pull them back from the brink? Investors and market watchers, grab your popcorn, because this saga is far from over. How the Children's Place navigates through this storm will be a case study for the ages. Stay tuned. Today's pick number 3 is Oversold Technologies, ticker OSUR. This company's been crafting some intriguing waves in the market, and here's why it's caught our eye. Oversold Technologies is no small player. They're the brains behind oral fluid specimen collection devices, a range of diagnostic products, and a suite of medical devices making waves both in the US and internationally. But here's where it gets juicy. Despite their solid fundamentals, OSUR's stock has been on a bit of a downward spiral since the start of 2024, dropping about 25% from $8.20 to $6.15 by the end of March. Yet, this is where the plot thickens. Despite this dip, they've outperformed earnings expectations and shown revenue growth, sparking a debate on whether the stock is oversold. Now, get this. Argus Research has slapped OSUR with a sell rating, targeting a price of $5, citing a mix of subratings from low to medium across the board. But hold up, Wall Street's got a different take, maintaining a moderate buy consensus with price targets fluttering between $5 to $9, averaging out at $6.33. This mix of optimism and caution paints a complex picture of OSUR's market standing. So, here's the clincher. Despite the stock's bearish pattern, there's a buzz that OSUR might just be the market's underdog, waiting for its moment to shine. And with an earnings announcement on the horizon on May 8th, 2024, all eyes are on OSUR, making it a stock to watch for anyone keen on uncovering potential oversold gems in the market. So, what do you think? Is OSUR a hidden treasure waiting to be unearthed, or is it a cautionary tale in the making? Dive into the comments, share your thoughts, and let's unravel the mystery of OSUR Technologies together. Don't forget to hit that like button if you're excited about dissecting more stock market enigmas, and subscribe to stay updated on all things finance. See you in the next deep dive. Today's pick number 4 is Shift4 Payments, known on Wall Street by its ticker symbol FOUR. Alright, let's dive into a financial saga that's been unfolding with a plot twist you might not have seen coming. Shift4 Payments has been making waves, but perhaps not in the way you'd expect. Hailing from Allentown, Pennsylvania, this isn't just any company. It's a titan in the realm of payment processing and tech solutions. Yet the tale takes a turn when we glance at its stock performance. Let's break it down. Now, catch this. For the quarter ending December 2023, Shift4 came out swinging with a 35.1% revenue increase from the previous year. Earnings per share? They leapt from 47 cents to an impressive 76 cents. But here's the kicker. Despite these solid numbers, the market reaction was lukewarm. Analysts had their expectations set sky high, and the results didn't quite soar to those altitudes, leaving us with a revenue and EPS surprise of minus 3.43% and minus 7.32% respectively. You heard that right. Yahoo Finance painted a picture that wasn't all rainbows and butterflies. Now, Shift4 Payments hasn't been sitting on its laurels. It's been hustling hard, sealing deals, and expanding its empire, like its noteworthy partnership with the Los Angeles Rams. Yet, in a plot twist, the stock took an 11.12% nosedive since the start of the year, according to the scrolls of Market Screener. This drop has sparked a debate hotter than a summer blockbuster. Has Shift4 Payments become the stock market's latest victim of being oversold? Enter the realm of market analysts and investors, all with their eyes glued to this unfolding drama. The question on everyone's lips, is Shift4 Payments unfairly caught in the crossfire of market volatility and investor jitters? With the company's solid fundamentals and strategic expansions, some might say the market's reaction has been more dramatic than a season finale cliffhanger. So, what's the takeaway from this financial thriller? Shift4 Payments, with its arsenal of tech-savvy solutions and strategic alliances, might just be the market's latest hidden gem, currently overshadowed by a cloud of market skepticism. As the plot thickens, it's a story of resilience, strategic plays, and the age-old battle between perception and reality in the stock market. Will Shift4 Payments stage a comeback, proving to be a diamond in the rough, or will the market's turbulence continue to keep it in the shadows? Only time will tell, but one thing's for sure. This is a story you won't want to take your eyes off. Stay tuned as we watch Shift4 Payments navigate these choppy waters, potentially proving to be the market's most underestimated protagonist. Today's pick number 5 is BRZE, Braze Inc., a powerhouse in customer engagement, and why its stock might just be the bargain bin deal of the day, screaming oversold to those in the know. Coming to you straight from the streets of New York, where Braze calls home, this tale of tech, triumphs, and tribulations is one for the books. Kicking things off, Braze just dropped its latest earnings, and folks, they've knocked it out of the park revenue-wise. But hold your horses. Despite smashing expectations, they've sent a bit of a chill down the market's spine, hinting at a demand slowdown on the horizon. It's like scoring the winning goal but limping off the field. Investors are feeling a tad jittery, wondering what's next. Now, let's talk future plays. Braze is out here playing 4D chess with their guidance. projecting a leaner demand landscape and hinting at an operating loss wider than your average bear might expect. This move has some traders seeing red, pushing the stock into a bit of a freefall. But wait, Wall Street's wizards aren't throwing in the towel just yet. Sporting a moderate buy badge with price targets that have you doing a double take, they're seeing a silver lining priced between 45 smackaroos and a lofty 80. The average target? A cool 64 and some change. Translation? This might be a dip worth buying. Since the clock struck 2024, Braze's stock has been on a roller coaster, making heart rates spike and plummet faster than you can say volatile. This earnings announcement, just another twist in the tale, leaving some to wonder if the market's knee-jerk reaction is hiding Braze's true value. Peeking into the social media and forum crystal ball, sentiments split right down the middle. It's a classic showdown between short-term skeptics and the long-haul believers, each camp pitching their tent. This tug of war could be adding fuel to the fire, amplifying the stock's swings. In a nutshell, while Braze has been basking in the glow of revenue growth and financial flexes, shadows loom over the demand forecast. Yet if you're tuning into the analyst's frequency, there's a vibe that Braze might just be the market's latest misunderstood genius, its potential overshadowed by a few cloudy forecasts. So, to all you traders and market mavens out there, Braze's story is one of a high flyer caught in a storm, its stock price buffeted by winds of worry and whispers of what's to come. But with insights and instincts sharpened by tales like these, who's to say you can't catch a falling knife and turn it into a trophy? Keep those eyes peeled and minds open. Braze's next chapter might just be a turnaround tale for the ages. Alright, that wraps up our rundown on Braze Inc. And with that, we've dissected all 5 of our oversold stock picks for today. If you've enjoyed this journey through the twists and turns of the market, go ahead and give us a thumbs up. Your support means the world to us here at Daily Stock Picks. Don't forget to subscribe and ring that bell. Our videos roll out after every market close, and you won't want to miss what we've got lined up next. Dive into the comments to share your insights or pick our brains on any of the stocks we covered today. We're all about building a community of informed traders. Thanks for tuning in, and remember, every day brings a new opportunity to make smart picks. See you at the next market close.